My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Capital, capital, capital. That's what everybody wants these days. And today, my special guest knows a lot about that. In fact, he is a capital coach. He helps people who are looking for capital set things up for proper funding. He helps people who have capital get connected with people who are looking for it, and all things in between. So, zooming in from beautiful Denver, Colorado, Karl Dakin. How you doing, Karl?
I'm doing great. I really appreciate being on the show, Dave.
Well, likewise. So, okay, you are a capital coach. We help people from time to time with capital as well. So, tell me a little bit about where you fit into the whole kind of capital situation. I know you've got a pretty broad spectrum of people and organizations you work with, but help us get our head around what Karl Dakin does.
Yeah, so the principal thing I do is I work primarily with entrepreneurs, startups, growth companies, and they're looking to raise funding, but they don't necessarily know how or what they need to do to get ready. They don't know who to talk to, which is more important than maybe how to pitch.
Yeah.
And so I describe myself as a person who gets it ready for funding. I try to figure out what's missing or needs to be improved or tweaked in order to talk to the right person at the right time and therefore create a relationship out of which funding can come.
Okay. Can you give me an illustration, maybe one of your more recent clients that you've worked with? You can leave names and company names out if you want to, but just kind of, or leave them in, it doesn't matter to me, but just kind of walk us through what they do, what they were looking for, why were they starting to look for money, where they were not doing anything or going wrong, and how you got them right on the right path, and maybe what the outcome was.
Yeah, so to use a real estate example, because I work with a little bit of everything, I had a landowner in northwestern Colorado who had acquired a sizable amount of land and was looking to engage in a more classical type of real estate development, primarily looking to single family homes, but he wasn't getting any traction. So he talked to me. We looked at the marketplace. We identified that workforce housing was actually the highest and greatest pain point in the community. And then we talked about restructuring as offering to maybe create a smart city within a small rural community that would be affordable, in which people could not only live there, but maybe have an ownership position. So we opened up the whole possibility of fractional ownership, how to structure the deals so that they could be both citizens and stakeholders at the same time. And this changed the entire nature from just another community to a smart city look, which is a hot buzzword, to workforce housing, which is the big buzzword in the community, but a different financial look. So we kind of rearranged the chairs and hopefully came up with a better solution. And we're right now talking to a number of larger investors who might be part of the team that builds the project out as strategic investors rather than going to a simple ROI investor.
Okay, cool. So that's one that's still in progress. Tell me about one that you started from A to Z, beginning to end. Sorry, I said Z, we're Canadian. A to Z, beginning to end, where you accomplish the whole thing.
Sure. There's unfortunately fewer of those, but nonetheless, one example was I was working with a company making shoes that better
Mhm.
fit on your feet. And they had already established themselves, had pretty good revenue, but they needed to get up and out. And so they decided that they wanted to target their customers as their primary investor candidates.
Hmm.
We used the investment crowdfunding approach, a Reg CF campaign, and we went to the customers and said, hey, we can package things up, a little bit of money, plus some product, plus some discounts, plus some other things that were all targeted to the customer that gave them greater value than the price point of their investment. And they were able to raise $1.3 million into their company, which helped launch them forward.
Oh, very, very cool. So what was the goal with 1.3 million? What did they want to do? Expand? Expand the factory, expand overseas, expand markets. What was the goal with the
A
1.3
little
million?
bit of all those things.
Yeah.
So they do all our production in China through 18 different manufacturers,
Yeah, okay.
which we'll skip over tariff issues for the moment.
Yeah.
But they went from a few models to I think they have over 75 different types of shoe models now,
Wow.
from hiking to biking to anything in between. And it's allowed them to move into retail stores, do more direct sales, just generally grow the business in all directions.
Very exciting. Well, that's a creative way to raise capital. So you talk one of your big concepts, and it's right behind you on the screen if people are watching this, is motivated money. So tell me a little bit about what that means.
Yeah, so a lot of entrepreneurs, when they come out of the gate looking for money, they're using a generic offering, kind of a one size fits all, which it might, but it doesn't reach to a level of creating enough motivation for somebody to step up to theirs. And they're competing with everybody else who's offering a similar offer.
Yeah.
So I start with a marketing approach of looking for what I call a funding soulmate, somebody who needs me more than the other way around. And
Well, that'd be nice, wouldn't it? An investor who needs us more than we need them.
yeah, and
Yeah.
they're out there occasionally. They're not there all the time, but it's somebody who is in trouble or typically trying to preserve an existing asset, or they can't quite turn the corner or get to the next level. And so when you show up, you're like the missing ingredient in baking what I call the cake of success. You can't bake a cake without sugar, and if you're the sugar, then they're going to talk to you immediately. So I want to move from talking to everybody to those who are most likely to invest. I want to start at the top and work my way down so that the campaign is shorter, sweeter, and more probability of success.
Well, that sounds wonderful. Can you give me an example of how that has worked? You already kind of did in the shoe example, but I look for because going after the customers, creating kind of a not only just an offering, but all the bonuses with discounts and free product and all that kind of stuff. I can see that. What's another example of how you've done that? What did you call that? You found your
Funding soulmate. If
funding soulmate, you got the motivated money method. So what's another example of that, Karl?
Yeah, so we had a software company that has been developing software for the construction industry that allowed the companies to borrow or lend employees to each other to manage their labor costs. And they tried an initial common offering of convertible note. The offering wasn't going anywhere in today's market. And so we sat down and talked about the fact that they would be better off if they restructured their deal as a discount on their services to the customers that they would have down the road and throw a little equity kicker on top of that. So it now allows kind of a layaway. The investor customer can buy a group of services that may take them a half a year to 2 years to use up, but they get it at a 50% discount from retail. And they get twice as much as they put in. So they invest 100,000, they get $200,000 of discounts. Then they get equity on top, which is a kind of a bonus round. But we've taken the eye of the investor off of ROI and we focused on something they know about that's within their control, and they get to move the needle as much as they want to. So it changes the psychology of the deal as well.
Very, very cool. How have you seen this concept, or have you seen this concept apply in real estate deals?
It actually works well in real estate. If you think about real estate as you've got some end goal where you're going to generate revenue, you're not going to stop at somewhere along the path. And this is where a lot of deals get in trouble in real estate. They go, well, I'm going to get the building permit, then I'm going to flip the land, or I'm going to build the building, and then if somebody else has got to get the tenants.
Hmm.
I like to work in reverse. I like to figure out how to fill the buildings up before we break ground. I want to work backwards from the end goal. And if I can do that, then what I'm doing is I'm telling anyone who wants to invest along the path, even if it's 4 or 5 stages, that this story is already over. You're just playing your role within the story. And I've worked on a number of projects where we went to employers. We asked them to basically pre-buy into the building for their employees, which served as both a recruitment and a retention incentive. And then we flipped it through a couple stages, so it became a wealth building for their low income employees.
Okay, I'm trying to get my head around that there, Karl. That sounds pretty
I may
cool.
have gone too complex, but
But so no, I get it because you're talking about the typical development type deal is you're getting investors to help buy the land, and then you got to take it through zoning and all that kind of stuff. So it's different chunks of money at different points along the way. And the end guy, whoever builds the building, is usually the one in charge of leasing it out or selling it to somebody who's going to lease it out. You go the other way around. You say, okay, how are we going to get this leased out? Let's find people that want to invest based on the end outcome and then also take them along for the ride on the other stuff as well. Am I understanding that?
yeah, no, that's correct. So we basically offered a no cash down pre-sale of a finished building to employers 5 years after the building is constructed.
5 years
We,
after the buildings. Okay, so it's raw dirt right now. If
yeah,
everything goes according to plan, it's probably going to be 2 years before the thing's even built out, right?
right.
And then 5 years after that, they get to buy it. So what are they buying? Is this like an apartment building or what are they actually
Yeah,
purchasing?
it'd be like a condo or a percentage ownership in a building, depends on how we've structured
So an
it. We could do it,
individual condo, it could be that they're buying.
right,
Okay, one
right.
unit. Okay, now I'm getting my head around it.
And
Okay, so you're offering that to them for sale, and how much are they paying now? What are they paying now?
they don't pay anything down. They basically contract to purchase it. So I've pre-sold the property.
You got the
The,
contract to purchase and sell there, pre-sold.
yeah,
Ah, ha, ha. Okay.
and then the deal is that 5 years down the road, we will sell them that unit for 10% below the then appraised market price with the commitment that they will turn around and take that delta and apply it to a down payment on behalf of the employee who will be the tenant in the unit for the 5 years. So essentially, instead of using the credit rating of a low income employee, I'm using the credit rating of the local hospital, the local school district, the government agencies, which is a way better credit rating than someone who's just working at minimum wage.
Not only that, but they're almost kind of doing a rent to own deal with their
They
own
are. Yeah,
employee.
that 10% down at the end of year five could be worth 6 months of pay to that
Yeah,
individual.
very, very. Now, I get this stuff, Karl. You're going into a hospital administrator. How easy or difficult is it to get their head around that?
Actually, they were giving me even more ideas when I talked to the local hospital. They said, this is all well and good. We like what you're proposing, but we have one more problem. We're bringing people in from out of town who are on call on 12-hour shifts, and we don't have anywhere to put them. There was
Mm,
actually no rooms in the manger or in the
yeah,
town to
yeah.
do that. So they said, we'll buy some of these units outright that we're going to keep. We don't even have to flip them because we need to keep this as an available
Right.
kind of
They've got
apartment rental
kind of
thing.
furnished midterm rentals for their people that are coming into town temporarily.
Right, right. So
Yeah.
that gave us one more revenue stream, one more structure within the deal, but it's still pre-sold the property.
So at the end of the day, with that particular project, did you pre-sell the whole thing? And if so, what did that actually translate into you guys being able to do?
Yeah, so the idea was to sell the entirety of the project. We got most of the way through getting commitments from different employers when the local city had kind of a governance meltdown. So unfortunately, I can't chalk this up as anything other a common risk of pre-development activities, uh, which everybody knows are off the scale risk.
Oh
And
man.
we're still working to get the local government to settle down and stabilize so we can go back to them and restart this. But yeah, it worked pretty well. I had commitments from the school, the hospital, the largest employers in the area, a number of the local utilities who had people or satellite offices. Everybody thought the idea had made sense because one, there was no money down. It was a recruitment incentive because we have no houses here. You can come and live one of our houses, and then you have to hang in 5 years if you're going to cash in on the reward. So it
Hmm.
had all the up boxes for the employer.
So forgive my ignorance around this, but how does that directly benefit you and the developer having those commitments ahead of time? Just Connect the dots for me if you
I
would.
yeah, so I had private investors lined up who would look at these pre-sold commitment contracts, knowing that they're there, understanding that if they put up the enough money that I could then leverage this with construction money, mortgage money, this would all fall out naturally because the back end had already been arranged.
Okay. Yeah. It makes you look a lot more credible in the eyes of investors, banks, mortgage companies, etc., finance people saying, "Hey, these guys have a lot of interest in this project," so it gives them a lot more confidence.
Yeah, I mean,
Even though
I've
no
seen a
money's
lot of
changed
projects.
hands, it's all paper
Yeah,
right now. Yeah, yeah, yeah,
it's
yeah.
all paper at the front end, but instead of saying someday we're going to have a building that we hope we may fill up with tenants, I go, the building's already sold. We just got to go through the motions.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. I love it. That is very, very smart, Carl. So you do a bunch of different stuff. Who are the kind of the stakeholders that you primarily work with these days? Like,
Yeah, so I work with a lot of entrepreneurs. Some are pure concepts with a new high-tech innovation. Some are companies that started off as a small team and they're now at a point of needing to grow rapidly and they've outstripped their profits before they need more capital to grow up and be all they can be. And then on the other side, I've tried to work with high net worth individuals, family offices, PE firms, and saying, hey, if you're looking for an investment, you have something in mind, but it's not ready yet for you to write the check, then you should give me a call. I'll see if I can figure out how to fix it with either somebody else's money or we'll create a three-way deal. I did a couple of those yesterday where two-way wasn't getting the job done, but three parties, we managed to get enough value on the table that everybody could jump in. Yeah, then I throw myself into the middle and go, let's talk about what can be done. I was trying to work on a water system for the Democratic Republic of Congo this morning, and I was explaining to him that if he partnered that with a sports team that's locally, we might get everything to fit together because despite their need for clean water, the sports teams seem to be more saleable than the water purification project.
I do not find that hard to believe. Well, this is fascinating, Carl. Congratulations on having such a creative mind and a creative way to play in the whole capital field. It sounds to me like this is a blast for you. Like you have a lot of fun with what you do.
We have good days and bad. I
Of
have my
course.
quota. I don't like to go over 4 rejections a day. So
Very good. So, hey, Carl, if people want to find out more about you, I think you got stuff going on. You've got a weekly show or something like that on. Do you do that on LinkedIn or what do you do?
yeah, it's broadcast on LinkedIn and YouTube once a week on Tuesday mornings, 8 o'clock Mountain, 10 o'clock Eastern time. I try to do a daily newsletter also on LinkedIn, and then I do speaking engagements like one that's coming up here shortly, where I'm going to be talking about crowdfunding in front of a national audience about my odd ways of thinking.
Nice. So, if people want to connect with you, Carl, where should they go?
I would suggest the easiest way, just go to my LinkedIn profile. Since my name's on the screen, you can see it. Just put that in, it's unique.
Yep.
And that will get you to my LinkedIn profile. I have all my contact information there. And you can see some of the projects I'm working on or have worked on over time.
All right. If you're not watching this and you're listening, it's Karl K with a Karl Dakin on LinkedIn. Carl, has been a lot of fun. Thanks for showing up for the show.
Thanks, Dave. I appreciate it.
All right, everybody, take care. We'll see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.